Hey folks, welcome to a product review at Finominal. Today we're gonna review BlackRock's Strategic Income Opportunities Fund, which trades under the ticker BSIIX. Now, the fund manages close to $40 billion of asset management, and it describes its investment philosophy as being a flexible bond fund. Now, let's have a quick look in terms of what makes this fund so successful. And we're going to use our alpha analyzer to do a quick benchmarking exercise. Now, as this is like the benchmark, I'm simply going to go for the US Aggregate Bond Index. And if we review the performance of BSIIX versus either the US Aggregate Bond Index or the 1 to 5 year corporate index, which is the suggested benchmark, we can see there are some differences, but also some similarities. So overall, BSIIX has done a lot better. From a performance perspective, you can see it's a pretty decent return since 2009. But you also do see some similarities. For example, during COVID, all of those three, well, two indices and one product, right? They all kind of like experience a drawdown. You can also see that when yields increase because of rising interest rates, right? BSIIX kind of suffered from that as the indices. Now, let's do a quick fact exposure analysis in terms of trying to see what the key drivers of this portfolio is. And I'm going to switch back to the S&P 500 for this returns-based analysis. And what we see that the factor betas to the major asset classes, they vary across time. And that perhaps speaks to the flexible mandate that the fund has, in a sense that the beta to bonds, and this is pretty speaking the investment grade bonds, that have fluctuated over times, right? So at some points you had more exposure to US aggregate bonds. At other times it was almost negative, or slightly negative. You also do see that there is a bit of exposure to equities. It's small, but it's there. And almost no exposure to the US dollar index or commodities. Now, that's in terms of drivers of this fund. So it's a fixed income fund as expected, right? But it is flexible. We can clearly see this here in terms of the beta fluctuating over time. Let's move on from looking at this fund on a standalone basis to how it's performed versus peer. So we selected 4 other funds from BNY Mellon, Calvert, PIMCO, and Thornburg that all focus on fixed income more opportunistically. And what we can see from a performance perspective since 2014, that effectively BlackRock's product, i.e. BSIIX, has done kind of like similar. It, I think, seems to have underperformed throughout most of its period, done a little bit better over the last 2-3 years, right? But the trends in performance are quite similar. Now, if you look at those 5 products from a Sharpe perspective, you do see that BSIIX generated a Sharpe over the last 10 years of 1.21, which is kind of like mid-range on the lower side compared to the other products. The one from Calvert generated 1.45, much better. Thornburg also 1.45. And from a fee perspective, you can see that actually BSIIX is the most expensive, or second most expensive one, with 62 basis points. The one from BNY Mellon is a mere 9 basis points. The other ones are kind of like similar in terms of 66 to 60 basis points. Now, finally, let's have a look at terms of correlation to equities, to stocks, as well as to bonds. You do see that BlackRock's product is slightly positively correlated to stocks with kind of like 0.36. And of course, you also see the correlation to fixed income. And from this perspective, it's very similar to those peers, right? They kind of all offer similar correlation to stocks and bonds, except perhaps the PIMCO product, which is slightly less correlated to equities. Now, that's from a peer group perspective. So BSIIX has kind of performed similar to peers, slightly low from a return perspective, sharp perspective, always depends when you measure these things. But let's see if we can replicate this fund. And what we do know is that the exposure to fixed income varies across time. This could be investment grade corporate bonds, it could be treasury bonds, it could be MBS. And there's also this yield component. If you look at the latest fact sheet, it does include a large allocation to MBS. And so what I've done, I've created a simple portfolio comprised of just 2 ETFs, one MBB and one high yield bonds, because we do know there's a little bit of equity exposure in this portfolio. And so let's see how this portfolio compares to BSIIX. And so what we see over here is, well, that the performance is very close. So stated differently, effectively, you could have replicated the performance of BSIIX, right, with just 2 ETFs, one MBB and the one HIG. And the nice thing about that is that the combination portfolio, whether the replication portfolio precise, cost 26 basis points versus 62 for BSIIX. Now, that kind of concludes our review of BlackRock Strategic Income Opportunities Fund. And as mentioned, it's kind of performed in line with its peers. Having said that, there's nothing magical about it. You can simply replicate this with 2 ETFs and do that at a much lower cost. Hope that helps. Have a nice day.